The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi guys, welcome back to the show. I'm showing my Bloomberg terminal in the back here, and the reason it's still back here is because I signed a 2-year contract with these folks. It's brutally expensive, and don't get into this situation. Just a warning to my friends out there. Let's take a look at the British pound here. This is kind of cool, and we talked about this yesterday. Just want to start out with some currencies here. 130.19 weekly unfair lows. Reached the low this week already at 130.57. When you have a volatile instrument, you have some wide profiles on a relative scale, you've got to be willing to kind of factor in a noise area, and you've got this 130.78 sitting here, also spinning around above these daily unfair highs. I like how this thing is basing, and I like how you've got a chance to play defense, and that's, I guess, one of the more important things. Somebody in the den is talking about the Aussie dollar. We're going to get in that in a second, but it's the same premise. It's, you know, how do you try to maneuver through the minefield? How do you some of the things, David White says, Basil, Steve Rhodes, Larry, Daryl Martin, Tom, Andy Heck. God, I hope I've not forgotten anybody. But I love to listen to all the shows because it kind of gives me some biased opinions. I try to block out one side of the marketplace. That's the simplistic way that I have to look at the markets. And the profiles kind of help me block out one side of, the short side or the long side. But when I listen to these other folks, some of the great hosts on TFNN, this is a collection of, I look at these idiots on CNBC and I just, we talk about Kramer sometimes, but it's really, a lot of these guys wear the tie and put on the white shoes every day, and they don't provide any value, in my opinion. And the guys on TFNN are just in a different universe when it comes to useful information. So when I listen to that and get those perspectives, it helps me also develop sometimes a little bit more of a biased opinion around my own, information on these profiles that we look at every day. But again, you watch this show, you might go, okay, here goes Logan, this real boring, simple way that I look at things with the profiles and the inflection points. But, coming full circle, this works for me. A lot of times, again, I'm just going to use Basil for example. Some of the things that he puts in perspective, I'm almost forced to listen to because the credibility's there. The information's exceptionally good. And I have to kind of say, okay, well, wow, I'm kind of thinking the same thing. I got a little bit extra oomph from a credible mind. And I've also got a chance to play defense, in my opinion, which is the most important thing when I look at these, profiles. And again, on the British pound in particular, 130.78, and then that weekly unfair low sitting down there. New profiles happen this week. A lot of times we'll explore the fair auction, just like on the yen trade that went up to 107 and some change the other day, has pulled back significantly. We're going to look at that. But those are ripe areas, and I put the word wait and play defense in the den earlier, and it's really, for me, it's that simple. It's let the market come to you, figure out your risk reward scenarios. We say this all the time. I'm boring the crap out of some people, I'm sure, but again, it's play the odds, try to get your risk reward scenarios correct, and sometimes like on this euro trade, I don't want to get shaken out. I mean, I feel like there's a much bigger something in play here on the downside. So, I've been talking about, leveraging against 111.43 with a short, with a in the money call situation, letting it do what it's going to do. I don't want to get stopped out of this trade. If the version of getting stopped out of this trade is just letting the call insurance plan take care of it. I understand completely what the stop is. If this thing goes to 140 tomorrow, which anything can happen, I understand that call hedge is there, and I understand my downside. And as we get up to 140, if that ever happens, the calls are going to be all intrinsic value, and the underlying is obviously, tick for tick for that at that point. But I'm looking for a little bit, lower move on this particular instrument, and that's the way I'm playing this one. So going into the Aussie, again, it's just, what are we looking at here as far as things to lean on to play defense if you're trading the underlying itself in an outright manner? 74.61, 62, we talked about yesterday, paired with this 74.81. So a little bit of a, 20 cent or 20 pip DMZ. And I talked about, let's just clear that area. I'm not a big fan of going short the Aussie dollar. I really feel like there's something here. There's a couple other things in play. We talked about Navigator getting above zero as we crossed and broke the profiles and kind of broke stride. I talked about nibbling here around 71.69, getting above there on this profile, but broke above. And again, it's okay to try to pick things up and get stopped out, but I haven't been a fan of being short this thing and looking for opportunities to be long. I still fully believe we can explore up to 77.46. I'm looking at this more of a long-term play, but, sometimes it doesn't work out. Yesterday we talked about this, and it's, seemingly has worked out. But it doesn't have to keep going north. You've got to always, again, understand you don't want a lot. One of the basic rules that we used to tell people in the prop environment when I was in Chicago, and we had 50 guys sitting there. Don't let a winning day turn into a losing day. That was one of the biggest things. But then, how do you define a winning day? What's the threshold of quantifying a day a winning day? And then, if you got to if you're up $4 and then end up losing $2, I mean, I don't consider that breaking the rules. But you set your threshold of where you want to try to start locking in your day, or in this case, your trade. And then you want to say, I don't want to give that back, and I want to use some kind of set of rules for the day or the trade. So for instance, we set a threshold for newbie guys, maybe $650. Then they could only give back half of that. All right. So if they go up 650, they daggone sure better not end the day lower than 325. Things like that. Those are simple, just, kind of play the odds type. I don't want to call them betting schemes, but just kind of words to the wise here. We're going to talk about the Aussie dollar, finish up with this and that concept when we come back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. Here's the Aussie dollar. Just to finish up with that, I'm in the scanner, which some very, very cool folks in the Philippines and in Lithuania that I've been working with, and have a software company that develops concepts and ideas with me. We do some great work in that company, but this scanner really, a lot of the things that I show on the chart on eSignal, it's a little bit better charting package, they're all basically baked into this scanner. So when I go to the Forex section and I look at the Aussie dollar, all the things that I've showed you on the chart there are basically, right here. Let me wait for this to come up here. And there's the 240s, and the reason I'm bringing this up, and this is exactly the same thing on eSignal that I just showed you. There's that kind of bounce off of those daily infra lows, and there's that weekly number there. But these 240s, I'm a huge fan of the 240-minute time frames to regulate the trade up, and then you've kind of got a little bit better place to play defense. And on that same concept that we just spoke of about taking a winning day and turning it into a losing day. What's the definition of a winning day? Those are, I hate to go off on tangents like that in general, but those are just, again, sometimes you have to, take some concepts from some people that have been doing this for a while and not try to recreate the wheel, and just understand that they beat their head against the wall, in this case, me, by trying to figure out what's going to work for a trader in general. And, when you set some real basic foundational rules in place, if everybody did the same thing, then it's just, this game's not going to happen. But a basic foundation of some tried and true tested words and concepts, and then you taking that and twisting it and tweaking it in a unique way to fit your own temperament and kind of psychology to some degree, getting some information from the David Whites and the Basils of the world and Steve Rhodes and the rest of the gang. These are foundational things that you can move forward with. At bare minimum, I think a lot of the things that we talk about here with the roadmaps that we talk about are, break-even scenarios at worst. So just wanted to throw some generic statements in there today, because sometimes, I like to listen, to some tapes, some YouTube scenarios of some guys just giving some basic information, because sometimes, especially when you're getting, beat a little bit in the trading game, it's good to go back and kind of review basic things, get out of all your trades, flatten everything out, and just kind of clear your head and start over. I have to do that every once in a while. Sometimes when you get into these, especially on the option side, when you get into some of these complicated strategies, and then you start trying to hedge it this way and that way and everything, you kind of a butterfly turns into a pterodactyl. If you've been there, you know what I'm talking about. But let's move on. The Japanese yen, this is something that I was actually expecting as we kind of got up into that 107 and some change area. Again, understanding where some targets really are in the neighborhood. We talked about this last week, had reached the 107, 71, 72 area. There's the top of the profile. These aren't painted after the fact. These are, again, known inflection points ahead of time. And then, the trade kind of being over. I'm not a big fan of going short this, so I actually was looking at trading a bounce today, 105.34. I had an OSO order in that, puts an order in, puts the wings on, OCO wings, and you can basically, go to sleep, do something else. But that obviously didn't work out. But the bigger move has been made here. Now we're pretty much completely in no man's land. And the yen right now is, again, just like we talked about earlier, sometimes you have to sit on your hands and just wait for the market to come to you, and there's really no way to play defense down here. So as we look at this, for example, this is another, again, a major concept of sometimes it's time to do nothing. And in this case on the yen, I think that's pretty much the case. All right, so hitting the rest of the currencies here, Aussie dollar. Talked about this possibly reaching 133, 107. I still feel like that's pretty much in order. That's your targets up top, and that's where you're going to be looking at possibly having a trading opportunity right now. We talked about leveraging off of this 131.09 to trade higher up into that area. That's still the case, and I think the defense area now is becoming, again, the risk reward. If you're stepping into this now, I think you don't really have a good risk reward to step into this particular trade this minute. All right. Did you guys read any articles on Goldman Sachs's new ideas, if you will, what they're telling their customers so they can take the other side of the trade and get out of their trades that are firm trades, if you will? Remember, they're the people that came out, and I'm going to go to the crude scenario here. They're the folks that came out as we were looking at crude, kind of getting into the really the expiration of the long trade. We started this crude trade looking at, and again, this is the September contract. We started looking at getting long crude in a big way above 29. So when we got to 47, just to do a little review here, Goldman Sachs came out at that point with, hey, it's time to buy crude oil. Well, they've come out now and said, I think what I read is they think gold's going to kind of slough off, right? So using the same premise that these folks are an indicator to fade to a lot of times, and gold's sitting at support now. Now, obviously, Goldman Sachs doesn't use our profiles to really understand how to trade the markets. That's sad. They can call me anytime. But as we talked about the 47 and then being, okay, well, the big trade is over around 50. We've hit that 50 mark. We've come off. Gold's kind of a no trade for me, or excuse me, crude's kind of a no trade for me right now. But let's back into gold, and let's take a look at the scenario that we have been looking at. A little bit of not a wide profile here on gold at this minute, but again, the big numbers, 1289 and a half down below, and that's coupled with that 1286. So you got a big, massive support down there on that. But gold really technically looks very well to me, and Goldman Sachs is now saying it's probably going to come off, and 1400 will never be reached. That being said, I like how this thing is basing around 1315. If it doesn't work out, you've got a bigger, better number at 1286, 1289, and that's just the way we're going to look at this, blocking out the short side. And because we're in an uptrend, looking for those support opportunities. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. A lot of times, too, if you're seeing my screen right now, I look at the indices profile heat grid just to kind of get the wave, the leverage, and the tide, as Basil coined it one time. I love that phrase, of what's happening on different time frames with different indices of the world to kind of get a temperament. Like here's the 1 hour. Again, starting to see some red fold over. You don't get this information. You don't get this kind of feeling using any other indicator. And a lot of times I'll look at these time frames on the globe to see what's starting to turn A lot of, obviously these 1 hour and 4 hours and then daily and weekly, they kind of, act a little slower as you go up in time frames, but, starting to get a little red, more red than green, actually. The 4 hours are super important to me. And if you don't watch this show a lot, one of the things this is a killer database going on in the background. I mean, you can hit South Africa to the FTSE to whatever, and all these calculations in these net profile breadth calculations that we do are just compilations of what's in that particular index. So in the South African index, there's 40 stocks here, so we do our calculations like that. And it actually, I'm pretty impressed with what our programmers have done with this. Just done an incredible job. So getting off that tangent and going back to Goldman Sachs and gold, it's amazing sometimes. There's agency trades and principal trades. And a lot of times, these firms that go out and, talk up a stock, bid up a stock with their customers, those kind of days are kind of changing, but man, is that criminal or what? I mean, a lot of times Goldman Sachs may put out information to get out of their current positions, and they may put that out. I mean, it's quite amazing. So you can't really listen to in my opinion, a lot of the guys on TFNN are just very technical focused, and the information that is fundamentally given, I think, is extremely valid. But a lot of these guys on the screen here, on the CNBC and the likes, even Bloomberg, you have to take a lot of things they say with a grain of salt. So gold, in my opinion, is a buy, and it's a buy here with defense below 1315, and it's also a buy on that 1286, 1289 area. That doesn't mean double down all the way to 1286, 1289, by the way. Again, stops have to be put in place. Let's take a look at the S&Ps. This is kind of interesting. We're probably going to get a new profile happening here. That usually is, overhanging supply. We'll usually explore those fair auctions. I think this is kind of a wait and see now on the S&Ps. I'm going to pull up our 240s, which I'm a huge fan of. And here's the situation here. We basically have, for the first time, what is this, in 100 S&P points or maybe more? Good gracious. Yeah, over 100 S&P points. Starting to kind of break down on the 240s for the first time, broke down, rallied back up into this area, 2062. I like how this is happening like this. I like how the new daily profile is attempting to appear. I want to take some shots on the short side, maybe able to trade this down into the new daily inflection points. You'll know when that happens. Here's the S&Ps. Here's that new profile attempting to appear right up there. I've got it in my dashboard here. But that moniker up top here is the index information associated with the current futures contract relative to the components within that index or futures index, or the index I'm sorry, you know what I'm talking about. So anyway, so looking at this new profile attempting to appear, we're sitting right at that inflection point on the 240s at 2162. At 2162, and that's the one we just showed. There's the new profile attempting to appear. And here's the breadth calculations on 4 different time frames right there. Here's the chart. You can get all this information pretty quickly. There's that view of the current real-time view of the price of the market. We're not disseminating prices on here. You guys know you have to pay exchange fees if we tell you that information. So again, let's look at some individual stocks now. Let's take a look at Apple. All right, so this was the big number for me. I got a little disturbed when it kind of rallied up higher than that 98.64 area, the unfair high on the weekly. But again, we talked about, again, that's what stops are for. Market kind of dragged this up. I like how this is acting. I like how the market may come off a little bit here, and Apple, again, showing itself as a weak stock in a market that had continued to just rally. Brexit kind of moved this thing, the rally back from Brexit moved it up. You know, rising tides kind of lift all boats concept. But now you've got something seriously to play defense against. 98.64 stops above. Talked about waiting until we pierce that, getting below that number again. That's happened. I like Apple to revisit lower numbers. I like how it's breaking down in the dailies here. You know, market coming off would really, really considerably help this situation, this particular trade. Let's look at McDonald's. A couple of stocks. Earnings 122.90. Looks like we're printing around 123 right now. So we're right in this area. The dailies on this particular platform are not going to show that. But if I go into our scanner and I type in MCD, there's McDonald's. We're going to show you pre-market activity on the 60-minute and 240s. These dailies and weeklies are regulated by eSignal's daily and weekly prices. That's the data feed we're using on this. But here we go. So here's actually the real level of the market on our 60-minute. There it is. There's the 240s. You guys can see where we're at here. But I'm going to go back to eSignal really quick. And we're going to talk through it from here. So what do you do with McDonald's? Do you look at trading this right now? There's really nothing to hang on to here. Rolling the dice before the earnings, that can be fun, I guess, and exciting, but I don't personally do it. So we're down below weekly unfair highs 125.80. I think if we can rally back up into that area today, that's where you probably are looking at this from the short side. Remember, it really has kind of underperformed. It's not the weakest stock in the world, as you guys know, but you've got some help here, bad information coming out, and again, recently relatively weak relative to the new market highs, and 125.80 would be a selling point, in my opinion, on McDonald's if you are looking to kind of have a trading opportunity here. I'd love to know what David White thinks about McDonald's. He's got some great information. Let's take a look at Caterpillar. We're going to take a look at this when we come back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. We're going to take a look at Caterpillar really quick. Here's the situation. Got a little news this morning. Obviously, 7806 looks like last print. So, again, trading a little bit below these daily for lows and weekly for highs. And I'm not exactly too excited about the market going straight up right now. I think, if you're looking at Caterpillar, you obviously have to look at the dollar situation. Very obviously multinational company, etc. Dollar looks like it may have kind of reached a little bit of an apex here. We talked about 98 was the target on this. We reached a high this week of what, 97.62. So kind of got in there from the 95.76 area. Dollar's a little bit in no man's land. But Caterpillar, I think in my opinion, you've got better things to spend mental capital on right now. You can look at this as on the long term. Hey, we actually kind of did what the market was doing. We're a relatively strong stock. I think the market could come off a little bit here and just kind of drag things down. That's not come off a lot, but again, I think this is kind of a don't spend the mental capital on Caterpillar right now. All right, so let's try to figure out what else is Goldman Sachs saying that we can fade here. And Kramer, of course. Yeah. You know what I think of when he's talking in front of the college kids and everybody's getting excited. They're going out and borrowing money on credit cards and actually investing in the picks that he taught. That is scary. That's what I think about when I see that. Anyway, and I think of how stupid I was when I was in college, and I would have done something like that if there was a Kramer show, probably. Anyway, let's take a look at the 10-year. You like to think that you're smarter as you become older. That's what you like to think, but I hope that's true. Anyway, got a nice base here on the 10-year, and the reason I like this is because, market, again, this thing, I don't think this thing's over. I think we've got more upside on the 10-year, and I think 132.28 is in order here to explore this fair auction. And I think that if the market comes off just any bit at all, we're going to probably just start elevating a little bit. I know we've got a bunch of FOMC stuff coming this next 2 days, but again, it is what it is. This is the bids and the offers and where they've determined where the market price should be right now. Don't try to overthink this. Let's hit silver. This is the September contract. Still love this trade. Love how it's hanging in there. Stops below 1904. That would be kind of the uncle point, really. Let's hit beans really quick. I'm always interested to see how ugly this thing's getting. This is a great situation too, why stops are so important. I played around with this 10-15 area, got a little bit of a trading bounce for a while, but then it was over, and that's where you kind of got to say, you know, where's the next big number on the downside? John from Philadelphia was really ahead of the curve on this one. I think we were trading about 860, and then when we got above 915, again, I'm sorry, this is the correct contract for a change. We got above there and kind of rattled around, and then we had the big move. So again, we're kind of in no man's land on the long term here, and here's the daily. Nothing to really play defense on a long-term trade, but you do have, I'm going to go into our 240s here. You do have something to play around with here, but as you look at when this thing started really trailing down, there's that 10-15 bounce kind of situation here, but again, was very short-lived. I think you got to wait and see on beans. If we have a big snapback rally to 10-15, you may have to look at that as actually a selling opportunity up there. Right now, I just don't see a lot of leverage in beans. Let's hit Amazon really quick. All right, so 732, 731, same situation here. Had an interesting question in the den right now, a private question. I'm just going to expound on it a little bit. By the way, Amazon still big support, 731, 732. Don't stand in the way of this train. It doesn't have to be too high. Question was about Navigator. What we're doing a lot of work in the background all the time, and we've come a long way with this scanner, but we're putting out an HTML5 version that's a little bit more slimmer, to the point, kind of one-click heat grid, heat map thing where you're going to get the chart, Navigator, profiles, and TAS says in one view. And it's going to actually have a kind of a trend direction in, green bars or red bars, like I show in this. I show Amazon green bars, red bars. It'll be based on the dailies, and it'll have Navigator in it, but we will work Navigator into the institutional version, which is what you guys have now. By the way, if you don't believe that people and institutions across the globe use this same product that you guys have and pay a lot more for it, this is an invoice I just sent to BNP Paribas, actually over in Switzerland, in Geneva. They're a institutional subscriber of ours, and they pay, and I hope they're not watching this show, they pay a lot more on the institutional side than you guys are paying for that same product. And they actually use it primarily for Forex. So, just some news for you. Let's take a look at a couple of ETFs here. The XLF, I'm not a big fan of being long this, obviously. I'm looking, obviously, we've got some FOMC information that's happening this week. It looks like we're kind of sitting up here and crowding this area. I don't think this is anything you ought to play around with right now as far as the banks or the XLF before they come out and run their yapper about the latest. They're day trading and not really forecasting at the Fed anymore. They're reacting to the latest government cooked numbers, which is concerning. But we're traders, and we have to go on what's available. Here's JP Morgan. Again, nothing to really lean on these things. I'm going to pull up Bank of America also. So we're looking at Bank of America. Here's one that has obviously been underperforming the sector a little bit here. I had an email about this one, 1447 up top, 1401 down below. Again, I think you got things better to spend mental capital on right now. XLE, let's just see how this thing's not doing well now. I mean, crude taking another dive down, got below 68.16. I kind of like this, but again, now you've got 66.47 to use as support on it. Liked it on a relative strength basis relative to crude. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got a caller, Lou. Lou, you there?
Yeah. How you doing?
Good. How are you?
Good. Hanging in there.
Great.
Yeah, I was wondering if I was thinking of shorting SSYS.
Okay. I got it up right now. I don't know if you're seeing it. I kind of like this. I mean, I like how it really has shown some market relative weakness, and also now we kind of closed last week below a big inflection point, 2053. You've at least got a place to play defense, and 1599 could be in order now. But the good news is I think you've got a really good risk-reward ratio on this one right now. It's come off a little bit, obviously, recently, already 5 points from the recent highs. But I like how it's acting, and I like how, again, how you got a chance to play defense here. And I like how it's rallied back up into that inflection point on the weekly unfair highs.
Okay. So.
Where are you located, Lou?
In New Hampshire.
Okay.
Yeah.
Wow, the start of the primaries, huh?
Yeah, right.
That's
wild.
That was the Wild Wild West. Well, listen, do you have anything else on your mind that we could cover while you're on? Okay.
Yeah, DDD.
DDD.
For a put.
Okay. Well, yeah, I don't follow this stock, but are you looking at it as a long or a short?
Short. Just
yeah.
Till the end of the week.
Yeah, I think. Again, I mean, I'd love to see this thing break down below 13 to really kind of get jiggy with it, I guess. But it definitely it does not look like a really good market participant right now, especially in the face of what's happened recently with the rallies up. You've got kind of a cliff sitting here on the weekly and the dailies now, but again, 13 is going to, I think, start washing some people out if we can just get below there. And
Right.
some people have to start covering, which will be good in your case.
Right.
Yeah, no, I like them. I like both the picks.
Okay, John, that sounds good.
Awesome.
Thank you very much.
Yeah, thanks for calling in, man.
Yes.
Okay.
Bye-bye.
Okay, guys, just to recap before we have to exit the show in about a minute and a half here. S&Ps, it looks like we may be in store for a little bit of a move down finally. I love how this new profile possibility attempting to appear is up here on the daily, and I like how we're gravitating below 240s for the first time in God knows when. 110 S&P points to be exact. Gold, I like this from the long side. I like playing defense below 13.15. The notes, I'm more partial to the long side here. I just like how they've held up. The euro, definitely still want to be short that with a hedge. Dollar, I think we're kind of just going to churn around here. I think the major move is over from that 95.76 up into 98 general neighborhood. Crude, there's nothing to really play around with down here and play defense against. So it's kind of a pass. Apple, love it from the short side. IBM, we're going to hit that one. Yeah, this is one we really talked about, showing some strength, compressing up into these areas, and is nonsensical. And as much as I have a long-term bearish slant on IBM, the technical patterns recently and the ability to buy support and buy breakouts have been there, and you can't fight that technically. So in my opinion, this is not the one to short. This is a block out the short side on IBM. Guys, you've been great. Stay tuned for Larry. You'll thoroughly enjoy it.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.